And in today's video, I want to give you guys an update on the NASDAQ 100 from a technical and fundamental perspective, as requested so many times by you guys. So we are going to look at the technical and fundamental side of it. If you are new to the channel, a sub would be appreciated, as I provide free educational content on a daily basis. And if you enjoy the video, a thumbs up would be appreciated to help the YouTube algorithm as well. Now, before we get started, I just want to give a big shout out to the members of the channel: Justin, Logan, Richard, Yazid, Jack, Josi, Andrea, Obaoke, Siambonga, Lungile, and Ilya as well. Now, I really appreciate the support there from you guys, as well as everyone else who takes out the time to watch the videos for their own educational purposes as well. Now, before we jump into the NASDAQ, it's important to understand how the economy works. Now, I'm sure you remember when the NASDAQ was sitting at this level, I explained to you all of the reasons why we could see the market start to move to the downside. Now, it is important to keep in mind the reason why the market had gone up, it's because inflation came through lower, right? Now, the reason why the market came back down is due to speculation that the Fed could hike interest rates higher than the 50 basis point that was initially anticipated when the inflation was announced to be lower. The overall expectation dropped to 62% that the Feds were more likely to hike interest rates by a half a basis point. Now, we're back at this level here once again. Now, this is what spooked the economy. Now, before we get started, it's important you understand how the NASDAQ works. Firstly, the NASDAQ is a composite that is made up of 100 top tech US companies. Firstly, the reason why the stock market goes up, that's because when consumer spending is high, then when interest rates are low, what that means is it encourages consumers to spend more because things are then more affordable. And as a result of that, the stock market tend to gain from this. Okay, so I'm going to give you guys a lesson here while I do the breakdown as well. There we go. So when the consumer spending is high, then that means that they're making a lot of money. Okay, that means all these people are buying. It's going nice. But in order for this to happen, interest rate needs to be low, because everybody loves to buy things at a decent price. Let's just call this rates. Okay, interest rate has to be low. This is the only way, because when interest rates are low, this by definition encourages people to buy. I'm sure you guys like to buy things and houses and cars and stuff when interest rates are lower than when it's higher. What this does is it moves the stock market to the upside, because it encourages people to spend because prices are lower. Now, what happens when you get something, what happens when you get to a situation where inflation goes out of the roof compared to where it is now, right? When things starts doing this, then things are now starting to become out of line. That means that inflation then starts to kick in. It means now that you've got people that are spending and spending and spending and spending and spending and spending and spending, and it's just spending like crazy. So this increases, and ultimately the Feds lose control. Now, the only way to bring this number down is to do what? Is to take back, is to increase the main purpose behind why this is so high. And this is what they have to do. So the Feds then come in and they hike the interest rates. As a result of this, all of that had happened because of this year is now going to see that happen because of that. When this happens, that happens. When this happens, that happens. Very easy. So when this happens, due to that, then you get that. When you get that, you get that, and you get that. Because if consumers are not spending, companies are not making any money, like Apple and all of that stuff. Now, there's a good reason of why I explained it to you guys before, okay? Because we're first going to look at this section over here, okay? It says here, stocks are set up to rally again as inflation okay, that the reads here, as inflation drops and recession risks abate. This guy said there as well. It says here inflation should continue to fall. Again, they're expecting inflation to continue to fall. Now, remember what I said, right? If inflation cools down and interest rates, okay, but when interest rates are too high, then you need to hike them to bring inflation down, and then the interest rates comes down as well. Now, because of this, based off where the NASDAQ is now, if this is really the case, then we should see the NASDAQ continue higher. Why? Because if the interest rates come down, that means consumers are going to go out there and they're going to spend money again. But let's continue. It says, yeah, I think the rally will regain footing yet in the balance of this year. He said also noting brighter prospects for corporate earnings. US stocks staged a bear market rally this summer but have since been pulling back. Yeah. Okay, it says your US stocks have been moving lower after they surged during the summer, but the market can find fuel for a rebound from declining inflation and signs of improving conditions in the world's largest economy as well. Now, if you keep that in mind, they say that there is a possibility that the Feds, that the stock market could rebound back, but the only way that's going to happen is if the next CPI numbers that is going to come through, if those numbers come through lower. So we have to basically now just wait and see if that numbers come through lower. But we can't wait because Powell is going to speak about the economy today. Next thing we can see here, it looks like Apple looks vulnerable to chart strategies that could be a warning for the whole market. Now, things are not looking too good there at Apple there as well. Now, apart from that, we know that Biden, because so we know that Biden is going to be has waived what's this now, the student loans. Okay, he's waived the student loans. So basically that is ultimately going to impact consumers because they're obviously going to have to pay those, because it will be worked into their taxes. So they could potentially see a tax hike increase, which is going to hurt consumers even more, meaning they can't even spend less. Now, before Powell starts to speak, I want to give you guys exactly how this is all going to play out, right? The NASDAQ still has a gap to fill over there. Okay, but the NASDAQ has just rejected the 61.8 after the market broke this previous level of support and resistance. And if you think I'm lying, you just take Fibonacci from the high to the low and boom, 61.8. Now the downside target for the NASDAQ is there. Okay, is allocated here at the minus 27. If you know anything about trading, you should know that's what you use for your take profit level in the market there as well. Okay, now if you go on the weekly time frame, what do we have now? You see how these time frames are contradicting, right? Firstly, you have a market that's now testing the left leg of an overextended W formation, but you also got the market breaking a previous level of support. Okay, coming back to test it as resistance then support, and is trading below that level there as well. So the market's now trading between these levels here as well. So I'm going to mark that level when we get onto the daily time frame, right? So if you drop down on the daily time frame, what do we have? Now you can see over here, this level that we identified over here, that was support that got broken, is also where the market opened up with a gap, right? This is it there. This is a structural level, and some people say the market needs to go fill in the imbalance and balance, and yeah, it's fine, it's good. But the NASDAQ, this is a structural level that we have identified from a weekly, but this is also a gap that the market had opened with, and when the market opens with a gap, it has to go, then the market never closed that gap. Now listen to me properly, right? Listen to me properly. The NASDAQ is gonna go clear up that gap. Then from there, are we going to monitor the price action? Now, this is where the tricky part comes in. Okay, That's from a weekly perspective. But on the daily time frame, you can see over here, right? The NASDAQ is also testing this previous level of resistance. This market here acted as resistance, support, then it's back to testing this level as a level of resistance once again. You understand? Now, the best way to approach the situation is going to be very simple. Based off where I'm sitting, the NASDAQ has to continue higher, and then from there, we monitor the price again to look for possible opportunities to the downside. But the market could also easily start this meltdown to the downside. Now, the way in which you are going to approach the situation, my good friends, is very simple, right? Now, if you have been following my analysis, right, you should have been in the buy there already. You should have been in the buy here. This is a nice long wick that's going to fill in. The market's also trading above this previous 4-hour. Okay, I'm not going to go into too much stuff there. But in any case, so if you are in the community chat, you should have gotten the entry there. Okay, you should have been. So all you do is you break even the trade, let it run, and go fill in that gap. Now, if you're not in the trade, I'd suggest you wait for this daily candle to close to get a proper confirmation. We need a clear daily close above that level, which is going to confirm this level of resistance as support. And then from there, we can then continue this move to the upside. Now, I'm in there because I like to buy cheap, because I'm a cheap person. I like to pay nothing for, I like to spend money on low prices. But that is the situation, and that's how you're going to trade the NASDAQ. And if you don't make any money from this, then I don't know. I've been almost 100% correct for the entire year forecasting the NASDAQ or the stock market. You guys need to start making money very soon, as I believe. Now that's all from my side, and thank you for your time. And as always, cheers for the years.